Good evening traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar and pound yen. So last week on the DXY I said that this inside bar here, the bearish one, closed above 93, which I thought was quite significant, and I felt that my actual words were last week was buying the dollar would be prime now. And obviously this last week just gone now, we had a nice bullish candle there, so it's quite nice to see that. Now if you look over to the monthly chart now, the month ends in effectively, although next week it's Tuesday week it is, but next week by the 27th we're going to find out exactly what this next weekly candle will look like. So if you get a nice bullish engulfing candle again, another bullish candle, that would be very, very bullish for the dollar. And the reason why that is because we would have actually either gone to test this level here of 94 or we broke above it. So I think for this week now, for the DXY itself, if we break and close above 94 at any point this week, that will signal quite a lot of bullish presence in the US dollar, and that will obviously filter down to the charts. So let's now look at the charts and see what we've got there. So on the Aussie dollar, last week I outlined saying I would prefer pull back up to this area here to get a good value there. What's happened is it went down a little bit, tested, come back up, and now come crashing down. So notice the 782, it was key for lots and lots of tests. It broke down, then it had a couple more days after. Now I think now again this is now going to head down. Personally myself, I feel it head down to around about the 77 area or 771 area. That's what I think will happen this week. Obviously by looking at the DXY, looking bullish, this Aussie dollar pair I think will then head downwards. The fact we got a nice mini double top there on the intraday, the daily 50 now has been respected twice here, and you have to give it some presence there and go, okay fine, you have respected it. So before I wasn't too bothered, it got a bit of respect and a bit of chop, but the fact it had a little mini double top and a nice bearish close for the day and the week, and below the key level, I think that's quite significant. The weekly doesn't give you too much, unfortunately here. There's not too much there at all. But for a short-term trade, I believe there is. So on the Aussie dollar, what I'm looking for is something like this. So this is your upward sloping trend line here on the 4-hour chart. Notice how the 4-hour 50 had been respected, then it respected twice here, come up, then come down, and broke down the 4-hour 50 MA, and at the same time this upward sloping trend line. So a pullback now to this level here to the 4-hour 50 would be quite ideal to see. And if we do the Fibonacci levels, there's a nice little fib entry there as well around the 382 area. So this is a perfect pullback, and the stop is above the 764 area, above the actual trend line as well there for us. So for me, all that points to a nice area to enter there. Now my target, although I said 771 on the daily, what I want to do is get up before that. So 7745 roughly, above these lows here is a perfect target, and this would give you a 2.5% trade roughly. So this will most likely happen Monday. A little pullback there, enter there, and just let it drop down. The 1-hour chart doesn't really concern me too much in any way, shape or form. I'll just left that there for the moment, but this is the same trend line taken across, and notice how it's also going to break down the 4-hour 50, the 1-hour 50, sorry, as well. So the 1-hour and the 4-hour 50 be in the same place, and you can get a reasonable trade there. Like I said, you can get this down to there roughly. That doesn't matter, you know, as it comes in you'll see, but it's definitely over 2%, which is quite nice to see. I'm not really too bothered about the MACD divergence. It's not MACD. This high is the high, this is a lower high, that's a high, and that's a lower high there, just so there's no MACD divergence or anything. So for the moment I like that trade for a Monday. And pound yen now. So personally myself, pound yen, I was concerned last week. I weren't too sure if this inside bar was going to give us the bullish pressure we wanted, or whether it was going to go for another retest. It didn't really go for another retest, but I'll go into it. So what's happened is this: we've got this triangle here. The overall triangle is here. Just pop that in for you very quickly. There we are. That's your overall triangle there. And what's happened is we broke the upside, then come down to retest the key level on the backside of the triangle. So that's a nice, beautiful trade there to take. And then it had an inside bar and a bullish engulfing candle after. So what we're looking for now is a pullback to value on the daily chart. That's what I'm looking for there. This downward sloping trend line got broken nicely to the upside as well, so you see it's there. The daily 50 I don't believe will be tested, but at the same time my stop is still going to have to be protected by that. So this is that there. You pull back around about here somewhere, 148.6, 148.7. So when we go down to the intraday chart, let's look at the 4-hour chart for that, and we'll see what pops up there. 148.6, 147 is where the 4-hour 50 is, and notice how, although it's not respected at the moment, notice how it has been contained by this downward sloping trend line. It broke up, then come back down to test the backside of this trend line, so you could say this is a little mini triangle as well, and then started to pull, make bullish engulfing candles afterwards, which is nice to see. So if we get an entry like this here, and a stop round about there, 146.7, let's drop back to the daily. 146.7 covers your stop, covers the daily 50 EMA beautifully. You may say you can go a little bit higher than that if you wanted to, 146.8 even. That there, but that I think that's a bit too tight, so that's what I'm looking for. And then we can now head for the next leg up higher now. So where is this trade going to go next? Let's take a little look. So normally we do expected pattern distances. So if you're not too sure how to work that out, I have done a video for that which I will try and tag in for you. But an expected pattern distance on triangles are just like this. So it's a 1-to-1 as always. There's your 1-to-1. There, that's it there. So the expected distance round about 169, 170. And if you look over here, I think that's too high. You've got 160 as being a bit of a key level there. So you can definitely see you can move up from this. But 155 would be my first ideal limit. So if you just do 155 as your price here, as initial first target, you have a little 3% trade there already. Now, obviously, some people may want to go tighter and do something like that and go for a 5%er. It's all relative to how you trade, but that's my entry point with this area around here somewhere, and that'd be my first target. If I was looking to extend it further after 155, it's going to be around about the 160, and then obviously, ultimately, personally, I do feel this goes up higher though. If you watch my video from the very beginning of the year, I expect it to go higher than that. And for me, if we just draw this trend line in here like that, personally myself, I think anything around this area here, 170 is definitely going to be the one you're looking for. So 170 for me is key. It's a key monthly level, and also this is why 165 is a key level. You've got a little mini touch there and some touches here in the past. And 155 never really, 150 never really touched my radar on a monthly perspective. So for me personally, I'll be looking for 165. That's my personal opinion for a monthly perspective. And with that stop in place being placed on the weekly chart, I believe you would get that no problem at all. So 165 you can tap in there. This is how I do my patterns and everything else. That's within the 1-to-1 pattern distance. It's 8.5% profit. That would take you probably to the end of the year as well. So between Aussie dollar and this pound yen, that should net you something like 10-12% for the end of the year, which is not too bad. Nice little 4% a month now. And obviously I'm going to do a little bonus for you while I'm on the roll here. One more trade I'm looking for is obviously euro dollar. Everyone's interested in euro dollar at the moment. Personally, I've been bearish on this since it's done this on the weekly chart. It's tested its level. I quite like that. This is a bear trend. I don't care what people tell me. That is a bear trend. This is the triangle. That's a break and retest of the triangle. That's what I see. Let me just draw the triangle for you. There's your triangle. That's your triangle. That's a breakdown. That's a retest. And now I think we'll head back down again. So 1.14 is definitely going to be the next level for this. So if you're going to go down and look for an entry point, let's take a look for you and find out what it was. So last week I said to you, you could enter off the weekly chart, no problem at all, which we ran about here, somewhere on this bearish candle here. So you'd enter there. My problem with this, I felt you need a safe stop just in case it come back up to test it, which it has done. So you're not going to get massive risk to reward in it last week, but I feel, so that's only a 1.8% risk reward, sorry. But I feel now that we've come up and tested it twice and we put a lower high in, I feel you can do something like this now and still target the 1.14 and end up with a 3% trade. So for me personally, that's the next ideal level we're looking for. But you could actually extend this down to 1.06 roughly for 11%, because I think ultimately that's where this trade now goes. The dollar, I feel, will power up. It's within the zone itself. Bear in mind the DXY. Let's remind the DXY again. The DXY has broken back into its zone again on the weekly chart. So let's show you the weekly chart again. Sorry guys, just do it very quickly. This is your range between 100 and 93. It had a fake out, it's come back in, tested it, and now started showing bullish presence here. I think that's key. I now believe it will now head back up to 100, and again when you just go back to the euro dollar chart, that I feel will head back down to 155. That's my personal opinion on this, and that's where I think it'll go next. So after that, who knows how we get there. Be a little bit choppy. I believe you can probably have a break and retest of 1.14 again and have a nice stop there and do another trade. That'd be probably towards 2018 now. I think that would be roughly. Depends on how many weeks it takes to come down. But that's what I'll be looking for. So there's a little bonus there for you. Just so you know what position I'm in at the moment. I am in dollar SEK. I'm in this position here at the moment. That's what I'm targeting. Something like this. So for me personally, you got your range again. You have almost like, this is almost like the DXY. This is just like the DXY, and I just feel that that's a very, very clean trade there. That's what I've got my entry at the moment. My stop's below the weekly low test there, which is quite nice to see. And I am targeting the highs here, because that's where ultimately I believe this will go next. And also notice as well, if it does have a break to the upside, it will be a break and reach this trend line as well. So I'll still get out before that, which is quite nice to see. Okay guys, I hope you had a good week, and I will speak to you soon. Take care.